Ladies and gentlemen, traders and investors, a very warm welcome to our channel Polo Vega. Since the geopolitical situation has eased up a bit this week with the ceasefire announcement made by the American president in the early hours of Wednesday, we shall touch upon the behavior of safe haven assets that could now provide a hedge against the volatile economic conditions imposed by the US-Israel-Iran war. Going by the behavior of gold, which spiked for the first few hours after the commencement of the attack on Iran and then nosedived to visit a fresh low above 4100 as the war progressed, one cannot rely on gold as a hedge against risky assets in their portfolio. The inverse correlation which gold used to have in the earlier days with the other risky assets does not exist any longer, and one needs to ascertain the beta of gold as an investment asset before including it in their portfolio. As we spoke in our last video, Japanese yen and Swiss franc, as well as no other assets classes, no longer exist as safe haven assets as they used to be a decade ago. USD has become the go-to currency for a while in the absence of JPY and CHF, but it hasn't been so in the recent past. Therefore, the search for a perfect hedge with a negative correlation to include in a portfolio of risky assets still remains on. Has the liquid asset class from the basket of currencies MLs to provide a negatively correlated option against the movement of markets been taken away forever, or is it a result of the strengthening and weakening of the currencies with the rise and fall of inflation that has brought us to this situation? This question can only be answered when inflation reaches its targeted level with employment and economic activity moving in tandem, and that's a long way off. With VIX reaching 19.419 this week, same as end February 2026, before the commencement of war, we shall now be able to see the effect of economic data on markets which are ignored in the last few weeks as a consequence of volatility induced by the geopolitical situation. However, one needs to see as to what happens during this week, as the ceasefire may not continue to hold and the escalation of war can again restart. We shall still need to be cautious of news affecting the expectation of extension of ceasefire beyond 2 weeks or otherwise, and this could lead to a change in the expected flow of traffic through the Strait of Hormuz, which in turn would affect energy prices and consequently change in the expectation of sticky inflation. On today's video, we shall talk about GBP USD, Dixie, US oil spot, gold, silver, the S&P 500, and Nasdaq. Disclaimer/disclosure. The contents of the presentation are for information purposes only. The material is obtained or derived from sources believed to be accurate, but we do not guarantee its accuracy. The presentation is the 31st of a series of interactive videos aimed at educating our viewers, and we'd like to warn all our viewers the risk associated with the business of trading and investment. Securities investment and trading is a highly risky business, and there exists a possibility of partial or total loss of investment. The ideas and opinions in our video are solely based on the analysis of the market, and we do not advise, recommend, guide anyone to take any trade based on the contents of this video, and we do not take any responsibility for the partial/total losses arising out of trades based on the contents of this video. Fellow traders and investors, the chart that I see in front of us is that of Dixie, or the US dollar index, and it is the daily chart. We've been seeing this chart for the past few weeks, ever since the beginning of 2026, and we've seen that the index has been in a sideways trend since April 2025. There was a very good chance of the asset class breaking out of its upper bound at about 100.4. There was a lot of momentum given by the current geopolitical situation, and it remained on the upper side for a very long time, but the ceasefire last week allowed it to gap down, and now it's in the middle of its range, and one needs to wait and see if it continues to go down all the way to 95.45, and is it able to break down, or whether it comes back up again to try and break out of its upper range, that's 100.4, and finally the controlling area between 100.077 and 101.88, which happens to be the controlling bearish candle that has kept this particular index below the upper bound for the last 11 months. Traders and investors, the chart that we see in front of us is that of US oil spot, and it is the weekly chart. Why we're looking at the weekly chart is because of the formation of a nice explosive red candle during last week after the announcement of ceasefire between US and Iran. However, since the formation of candles on this particular asset class is being geopolitically controlled, one needs to wait and see the formation of future candles on this chart to see if any supply is formed after the formation of a nice supply area on the daily time frame, which was formed during this week. One needs to see if any explosive rally candles are printed to go back into our supply area on the daily chart, where one can have an entry at 101 and a stop loss above 106.58, or to be on the safer side, the stop loss could be taken above 115, but that would be a very big position size. Therefore, the best thing to do would be to wait and watch for the candles to reverse if at all a blue candle is printed. Otherwise, one need to see if this particular drop candle is followed by basing candles during this week, and then a nice explosive drop candle is formed to form a drop base drop formation, and there could be another supply area formed at about 90, and the stop loss could go above 95 as we see during the current scenario. However, there are some lovely demand zones already formed on the daily time frame, and we must look at the areas which were highlighted in blue on earlier occasions and which have not been taken out as yet. Therefore, a supply trade at 100 could have a target around 91 but not below that, because of the presence of a lot of buyers. As we can see, during the last 3 weeks a lot of buy orders have been left behind between 87 and 60. Therefore, the supply trades or the short trades have to be taken with tight stop losses, and if we need to go for a long, then we should see a nice clean reversal on the daily time frame to join the newly established uptrend. Fellow traders and investors, the chart that we see in front of us is that of XAU/USD, which is the ETF based on gold, and we're looking at the weekly chart. Why we're looking at the weekly chart is because of the basing candle that was printed during this week, and there is a chance that gold could break out in either direction after the collapse of the negotiation meeting between US and Iran. There could be a possibility of the war or the ceasefire coming to an end, or the war getting re-escalated, and that could lead to an increase in the oil prices, which could be followed by a drop in gold as we've seen during the past 3 to 4 weeks. However, if the ceasefire continues, then we can see that the candles will continue to base because of a directionless trade between the buyers and sellers. As of now, we can see that neither the bulls nor the bears have got a hold on either direction of this particular ETF. So as of now, there is no direction in trading. So the best thing to do is to wait at the sidelines and watch the asset class form a supply or demand beyond this level. If it goes up, there could be a demand area that could be printed on the daily chart, and that would allow us to take longs in the forthcoming weeks. Or if it drops down, we could see a supply which will be the fourth lower high from the previous three highs, and then we could sell a short on the ETF if at all the supply is formed. But there is a very nice opposing demand zone between 4500 to 4080, and that could prevent the asset class from immediately going down to lower levels. Fellow traders and investors, the chart that we're looking at is that of XAG/USD. It is the ETF based on silver, and it is the weekly chart. On the weekly chart, we're looking at two controlling candles. The first one being between 90 to 79, and that's the bearish candle that's controlling the bulls and taking up all the buy orders until this time. There were two basic blue candles formed during the last 2 weeks, and the bullish candle that was formed during week before last is not a very convincing one. So we shall need to wait for the formation of a nice explosive blue candle to see if there are any higher lows being formed, or if there is a chance of reversal. And we can see the red candles are formed and they close below 61, which was the last low touched by this asset class. As of now, we shall need to wait for demand or supply zone to form on the daily chart or on the lower time frame to allow us to take a decision whether to go short or to go long, because there are no bulls or bears in this particular area where the trade is currently taking place and the basic candles are being formed. We shall need to see the influx of bears or bulls to take it up to a higher level or to bring it down to a lower level. So the trade that we're looking at as of now is that of scalping, which is going to be on the lower time frames, either on the 4 hours chart or on the 1 hour chart, where one can follow the higher lows and wait for a drop candle to take us into a demand zone on the lower time frame, and then try to go to the next high, which is a not very convincing area, which is at about 77.25. Traders and investors, the chart that we see in front of us is that of Nasdaq or NQ, and is the daily chart. One can see that Nasdaq has successfully printed 7 green candles in a row, or 8 candles, with the 8th one being a basing candle or a doji that was printed on last Friday. However, it has certainly managed to reverse its downtrend and establish a new uptrend on the daily chart with a nice base rally going in favor of the asset class. It has a very strong opposing zone between 25714 and 2623A, which is the strongest of the bearish areas on this chart in the recent past. This is the high that was formed after the all-time high, and this is where the downtrend in this particular asset class commenced. Therefore, one needs to see if the asset class can take out this area during this week, or if it bases around this area with a lot of bears coming into play and a lot of sell trades obstructing the buy trades, and maybe it can experience a temporary reversal to come back all the way to 24403, where we have a very nice chance of joining the newly formed uptrend on this particular asset class. But there is also a lot of geopolitics in play as of now, so one needs to be very careful while going into this long trade with a stop loss as tightly placed as close to 23971.50, and the entry would be 24403. We need to wait for the reversal to take place after hitting the area between 25714 or 26238. one needs to see if there are basing candles being formed below this area or in this area. But that is how one needs to place the target for this trade taken between 24403 and 23926. That's the position of the long trade, as we can see. Traders and investors, the chart that we see in front of us is that of S&P 500 or ES and is the daily chart. Similar to Nasdaq, S&P as well has reversed its trend temporarily. As we can see that there was a nice drop based rally followed by a rally based rally on the daily chart, and we are now in a downtrend with 7 or 8 candles printed in a row and all green candles except for the last one, which was a doji on Friday. But if it starts basing around this area, we could wait for it to fall in our rally based rally demand zone and try to take a long trade here between 6632 and 6504 as the stop loss area, and one can go all the way up to 6857 as the first target. And if it continues to go up as of now without reversing, it could face a very strong opposition in the area between 6969 and 7046, which is almost the all-time high, and one could find a lot of sell orders waiting to take on the buy orders placed during this temporary uptrend. We'll have to see, and we'll have to wait and see if it reverses back into our expected demand zone or whether it continues its way up after consuming all the buy order, all the sell orders lying in this area between 6969 and 7082, which is the all-time high. Traders and investors, the chart that we see in front of us is that of the pair GBP/USD and is the weekly chart. This particular pair is also known as cable, and cable has maintained a nice uptrend since September 2022 up until now. Although the uptrend is broken in stages of sideways trends, but it has managed to break out of its sideways upper bounds and make newer highs and higher lows in subsequent years. Therefore, one needs to be very careful if deciding on a short trade at any point of time on this particular asset class, because the general trend on the weekly chart can be seen as an uptrend, although the chart can show us that the trend on the daily time frame as well as the 4 hours time frame is kind of sideways. So it will be safe for us to go for a long at the lower range of the boundaries of these sideways movements, where we can see that on this particular chart on the daily time frame, the demand area is between 1.31 and 1.300, which is slightly higher than the previous low, which was between 1.28 and 1.27. But as of now, we shall see that there are 5 nice bullish candles formed during last 1 week, and if we can take the new demand zone as the pivot between 1.315 and 1.322, then we could certainly find a lot of obstruction to the short trades taken from this area or into this area, and there is a high chance of reversal and the trend reversing back until it reaches 1.38 where we could take our first target. But knowing the current situation, one needs to wait and see the weakness develop in US dollar against the sterling. If at all the central government policies do not interfere or intervene with the currency strength and weakness, we can certainly follow this newly established uptrend up until 1.38 on the daily chart. We hope that our presentation has been informative and exciting enough for you to come back and watch all our videos every week. We shall continue with our weekly commentary and analysis. We shall be touching upon events which are the highlights of the week and shall also talk about interesting asset classes each week. If you liked our video, please give us a thumbs up and press the bell underneath to subscribe to our channel Polo Vega and watch all our videos. You may also visit us at our website www.polovega.com or get in touch with us through our Twitter handle @PoloVega. Please keep saving, investing, and getting wealthier until we meet next. We thank you for watching our video and please like, share, and subscribe to our channel Polo Vega.